We had a huge move last week with stocks launching, cryptocurrencies to the highs, and gold finally making a move. Well, in today's Sunday prep video, we'll be talking about whether this move will continue. Gold back to its all-time highs, stocks back to their all-time highs, institutional activity this past week, which I think is very interesting. You'll want to stick around for that. Rate cuts, whether they're going to happen or not, and some leadership shifting that's going on in the currency market. As we get started in this video, do me a big favor, hit that thumbs up button. If you're new to the channel, subscribe. And with that said, let's jump right into it. I want to start here with what happened on Friday. Why did we get this monster green candle? And this actually looks pretty timid compared to what we saw in small cap stocks. Small caps ripped hard. The Dow Jones also took out its previous all-time high, and the NASDAQ had a nice bounce as well. The dollar index made a shoot lower here, and gold finally had a little bit of movement. The question is this sustainable? And what's going on with Bitcoin over the weekend here, making a move lower? Ethereum was up like 13% on Friday. And so the big question for the day to start things out is what happened, and is this actually sustainable? Take a look from a technical basis at the S&P 500. Now, even if you don't trade the S&P, I think it's really important that we keep an eye on it. It is a risk barometer, and when stocks are doing well, most other things that are risk assets like cryptocurrencies, individual stocks, risk-on currencies, typically will also follow suit. So we saw some really big changes in markets here on Friday, and essentially, long story short, the Fed seems like it's going to cut in September. They marked specifically, if we go take a look at kind of a summary of what we got from the Fed, they said, okay, inflation has a little bit of risk, yes, but we think that we're restrictive enough to kind of also administer to what we've been seeing happening in the labor market. If we take a look at the non-farm payroll, you can see it has been trending lower here in the United States. If we take a look at JOLTS job openings, we can also see this has been trending lower. What does this show us about jobs? Well, jobs are under pressure. And so the Fed is saying, okay, I think it's time that essentially we start to make a move to address what's happening in the labor market. Yes, we've got some sticky inflation to also watch, but perhaps we will proceed with caution and cut some interest rates. Of course, what loves interest rates? Stocks love interest rates, because if you get interest rates, stocks pop on the idea that borrowing costs are going to be lower. People can go buy houses and get mortgages, and businesses can finance debt so that they can grow more at lower borrowing costs. It's essentially like printing money straight into the economy, and people love it. So the stock market jolted higher on this. There was a notable clip of Jerome Powell basically saying we think we're restrictive enough and we may be considering adjusting our policy. I'm paraphrasing, but that was the idea. So stocks found support and made a huge push, but notice how they came right back to their previous all-time high and stopped for the week. The question now becomes, is this a sustainable move, and can we actually get a prolonged break through the highs? Was this enough for the market to cheer and celebrate? Well, what we saw here prior to the big Friday push up was the market kind of selling off because they were getting a little wobbly ahead of Powell. Myself included, I thought we might get a little bit more of a hawkish Powell, but instead we got pretty dovish version of Powell. Now, if you don't know what I mean by that, dovish just means the Fed is considering rate cuts, and hawkish means they're more willing to hold rates steady or even hike them. So we saw this big push up, and for me, from a technical basis, we are still in the context of a very strong upward trend. It's hard to deny that we don't have a very confident move higher in momentum, and that for the time being, the path of least resistance for stocks based on price action seems to be to the upside. The bigger question to me is it worth the risk to reward to buy stocks at current levels? And if you've been watching my videos, then you know what I'm going to say here. The risk to reward on stocks at all-time highs is just not quite worth it to me. I'll tell you why, both fundamentally and technically. From a technical perspective, we are very stretched. What I mean by that is that we have not had a sustainable pullback in the stock market since those April lows. You know, you kind of had this kind of April pullback. That was a 7% move. But really, we have not even seen, I mean, this is the biggest pullback. It was about 3.7%. We have not seen a 5% pullback in quite some time. And just from a simple perspective of markets move in waves, I think it's appropriate to wait for pullbacks and to wait for that risk reward profile to become a little bit more attractive before I start buying or trading the indices on the long side. I also have some issue with what we see happening in the stats that we can track here. So if I pull up really quick, there's a couple things I want to show you guys. For stocks, first of all, I am a little bit cautious because take a look at our U.S. economic heat map. When we look at this, what we have here is a very ugly outlook for stocks. Why is this? Well, some of our forward-looking indicators of the economy, PMIs, retail sales numbers, they've been really bearish here recently, missing expectations by a long shot. Not to mention, guys, that PPI number showed some really stubborn inflation coming down in the wholesale prices, which could materialize later to the consumer. That is problematic. And not only that, we also had in the previous NFP report a really poor number. So what I'm getting at here is I think that the stock market at all-time highs just does not have a very good risk profile. What I mean by that is that buying the stock market here with a stop below here, I don't see massive potential upside from here. Now that we have, company earnings have been really good. Earnings, of course, are a really important component to the stock market. We also, of course, had basically a lock-in on interest rate cuts in September. We have a lot of good news that it's already been kind of realized by the market. So what I mean by waiting for a better risk profile is looking for technicals to pull back and give us a healthy corrective move, in which case I think the risk to reward starts to become a little bit more attractive. And again, I might not get it. I'm not willing to kind of go out and short this market, but a pullback of 4, 5, or even bigger than that, 8, 9, 10%, somewhere in this range, makes stocks way more attractive to me for a potential pullback buy. Now, I am watching and trading some individual stocks, which is a little bit different than trading the indices. And if you'd like to hear more of my thoughts on individual stocks like Amazon, Nvidia, Google, Robinhood, AMD, all these individual stocks, I have a secondary YouTube channel called Trader Nick-Stocks on YouTube if you want to find me there. From the index level, the NASDAQ also had a really good pop off of the Friday move, but notice how this one on a relative basis has not had as much of a, we didn't fly through the highs, as opposed to some of the very rate sensitive stuff like the Russell 2000. And the Russell has actually been having a phenomenal bounce back from those April lows, up 39%. That is pretty incredible to say the least. The Dow Jones has also had a really nice recovery and had a really strong candle on Friday. If you are a stock market bull, the Dow Jones to me actually looks like the cleanest chart. We had past resistance that could come back into play, and in that case looks really attractive for continuations. These are some of your more value-centric stocks as opposed to, the NASDAQ, which is more growth-focused, technology stocks, things like that. And so, for my concept on the stock market, though, I also just don't have the context. I don't have the confirmation from my software here, the EdgeFinder, to really get behind the idea of like, okay, stocks are bullish, right? I actually don't have the stock market indices as bullish readings on the EdgeFinder. Now, they're not on the list. All I have to do here if I want to add them is just add in neutral scores. And if I go indices here, right, I've got stock markets all getting neutral readings. And the big holdback here is the economic data, right? High inflation and cooling jobs data. You might say, well, rate cuts will save the day. Well, yes, but there's a potential, and this is the concern for me, is that there could be rate cuts, but what if they're a little bit too late? What if the economy is already starting to slide and we enter into a slowing economy environment, in which case, yes, rate cuts could help, but it could be too little too late. And so for me, the risk profile does not make sense at all-time highs. So for me, stock indices are going to be a skip. But what about silver and gold? Well, I also wanted to take a look at the institutional activity. Before we get into gold and silver, let's take a look at some institutional activity for this past week. So what I'm looking at is the commitment of traders data that we've pulled into our software here and visualized in these kind of easy to read tables. What I'm going to look at here is I want to actually, this is our longer term indication of where institutional positioning is. You can see they still have pretty long-term bullish positioning on silver and gold. It has been the case for like 2 years straight now. This is more of a long-term indicator, this top section, but this table down below, this is going to show us some of the interesting, juicy information from this past week, aka the latest weekly buys and sells. This is the week-to-week change in some of the institutional activity that we see happening out there. If we take a look at the British pound, this got bought here, South African rand. The Russell 2000 index actually got some positive accumulation. And the way to read this is really you want to look at these two columns, the change in long contracts and the change in short contracts. And notice, guys, that the Russell, which has been actually a very heavy short for institutions, they did do a little bit of net buying. They added long contracts and they decreased their their short contracts. So that's a very bullish change week over week. Let's keep going with our data points here, and we can see the New Zealand dollar and the Australian dollar, both traditionally considered more of risk-on currencies, saw some interesting shifts. Yes, they added more shorts than longs, but the short side has been so heavy on the Aussie and the New Zealand dollar. So kind of an interesting shift there, a little bit of bullishness in some ways, right? Adding shorts, but also adding longs in an environment where they've been very short these currencies. SPX is also really interesting. You have a decrease in long contracts and a substantial decrease in short contracts. Looks like we might be seeing some short covering happening on the institutional side of the SPX. Yes, they decreased long slightly, but this is the real big juicy number, right? You had a big decrease in short contracts. That's a bullish change week over week. Let's keep going. Take a look at silver, for example. Silver, they added long contracts, decreased shorts. The Japanese yen, so there's a little bit of buying in silver, aka JPY. This is the Japanese yen. Keep an eye on this one always, because the Japanese yen can obviously be sort of that safe haven currency, and huge demand for yen can be a red flag. So we did see some increase in long contracts and also a very small increase in short contracts. Let's keep going. U.S. oil, interesting to see. They added longs and added shorts. Let's kind of skip down to U.S. dollar, right? So U.S. dollar, pretty mixed, right? They decreased longs, decreased shorts. Let's now look into some of the things that they sold. They sold gold, right? Decreased longs, increased shorts. Thought that was kind of interesting and worth mentioning today. The NASDAQ, they decreased longs and also slightly decreased shorts. So just a little bit of closing of positioning on the NASDAQ. Thought that was worth mentioning. I'm not going to say that this week's COT report was incredibly indicative of anything. It kind of is a mixed checkerboard looking thing, a little bit of risk on, a little bit of risk off. Buying some yen, selling some gold. Not really a hugely important commitment of traders data, but sometimes you get some really big indications each week from the COT report. That's why we monitor it, and why you can also do the same with something pretty cool we just launched. A free version of the EdgeFinder is now available, and COT data is partially free within this software that I'm using. Now, of course, if you are already a full-time EdgeFinder user, you have access to everything that we've built, our commitment of traders data history, and much, much more. But a lot of viewers who are not yet using our premium version of the software but want to explore it, I've got something cool for you. Down below in the description, you can actually sign up for the free demo version of the EdgeFinder starting last week. We launched this to the public. Yes, it is a limited version, but it's a great way to start using some of our tools and to explore the full list of things that we build to help traders around the world. We have thousands of customers who use our tools to better approach the markets. And again, I invite you to also do the same and explore some of the tools that we're building here and maintaining at A1 Trading. Or just head over to our website, a1trading.com, and explore all of our free course material, software tools, etc., and more. Okay, so I also wanted to show you guys some COT data charts more on the historical side. We can still see the trend in dollar is still to the downside. Institutional activity short the dollar and continuing to add to it. The gold market, right? So gold overall, a little bit of selling in this past week, but remember, context is key. We still have a upward trending institutional activity in gold. I thought that was worth mentioning. The NASDAQ, right? Yes, a little bit of selling this past week, but a gradual increase in demand for the NASDAQ. So I thought that was also worth keeping an eye on. But things get a little bit different when you look at the S&P. S&P 500, a little bit opposite. We've seen this kind of trending downwards direction in institutional activity. Again, check out the free demo version on our website if you want to explore some of our COT data from here. Okay, so what else? What are we looking at here? What we can also go into is metals. I mentioned earlier or briefly hinted that I am bullish on the metals given the environment that I just got done describing. So the EdgeFinder, the top setups page, it basically builds us a bias based on sentiment data, like the institutional reports that we just looked at, and retail crowd sentiment, technical data, so it's looking at trend and momentum, and an economic score. So what the EdgeFinder does is it pulls in all this data, and then it automates the process of analyzing all of it. Instead of looking through 37 different tabs, the EdgeFinder does it all automatically and generates bullish and bearish readings. And what I want you guys to notice here is look at the top of the list. You know what this tells me? This tells me the EdgeFinder is, and still is, it's been bearish on the dollar, bearish the dollar, right? That has been the theme here. Gold and silver have been getting strong readings. Euro dollar and pound dollar join the list. Not to mention the Kiwi dollar also joining the list. Why do I say this is dollar bearish? Well, look at it. Gold and silver going up typically coincides with weakening dollar. Not always, but most of the time. Euro dollar, euro up, dollar down, pound up, dollar down, right? So there's a couple things we need to check on this to see if there's some possible trade setups going into this coming week. Let's start with gold and silver. I'm going to go ahead and say this. I know gold is a crowd favorite and everybody wants to talk about gold, but gold is still sort of on my no-fly list, if you will. I'm waiting for technicals to show some actual signs of trending nature in gold. I've not traded it in several weeks and actually even a couple months now. Last time I traded it was over here. I bought, ended up closing out for a profit, but have not traded it since. It's just been so choppy and just have not loved the price action here. So anyways, gold here for me would be more interesting if we were to start to see some technical breakouts above these previous highs. That looks a lot more attractive for possible longs, or if you were to get more of a pullback all the way down into this 3260 area, to me that may be worth playing again as I have played that level previously. So I'm watching gold from a bullish perspective, but not really interested at the current price level. I'd love to see Friday's move follow through just to show me, okay, bulls are actually moving this thing. We're moving with some momentum. Or a pullback to a level that I think is attractive enough for buys. Silver was up at over 2% on Friday. I think it was like 2.2%. Really nice move and looks actually way more attractive to me than gold. Take a look at the daily chart. Trend seems to be in the positive direction. We're actually moving here with some conviction. And so when I look at silver back into these areas, if we were to see something like this, I actually think that there may be some decent risk to reward on silver. Although really what I like would be a pullback. Let me see if I can get another rectangle here, just kind of showing this area of support where we did make one more kind of last-ditch effort to go lower. Sellers tried, so they failed, and sellers were kind of pushed back. Bulls kind of took it from there. So I'm watching silver for something of this nature this week, a break and retest into this area around 39.15, let's call it, for continuation plays. I think silver has a lot of room to run, and I really like the technicals on silver a lot more than gold. Take a look at silver and then, kind of take a mental screenshot of this, and then let's look at the price of gold. Right? One looks way cleaner than the other in my view. So I'm looking at silver for possible longs. I like the trade better there, and would be willing to kind of look for a momentum trailing stop approach on this. So specifically, I would be interested in a breakout, something of this nature. If you had a nice strong closure, let's say on Monday we get a nice pop through the highs, something like this looks really attractive to me. And what I'd be doing is I wouldn't put a strict take profit order. In fact, what I would do instead would just be looking for an opportunity. Not sure what's going on with my TradingView there. Basically looking for something like this where I could put a stop in, and if the market makes a series of higher lows, I would just be trailing that stop behind market structure, as I typically do if you're familiar with my trading style. If you're not, I essentially trail stops using market structure and use fundamental analysis for directional bias. My directional bias on gold and silver maintains to the upside and looking for that momentum to continue in the coming week. So we'll see if we get those setups. Let's take a look at euro and pound dollar, both of these getting some strong readings. Look at that that euro dollar move. 1% higher here on Friday, really nice push, and you've kind of got this downward structure here breaking out. Would love to see something like this. I actually think that could be another setup here for the coming week. Would love to see also a break through the highs, or if we do want to come back and test this 1.16, Both of these areas look attractive to me. So yeah, looking really good on Eurodollar for continuations of this trend that we've seen for most of this year. Dollar downtrend still intact in my opinion. Pound dollar, similar story, had a breakout retest of this trend line here and now making a push up. Would love to see either break retest or a pullback into this area here, both as long as the EdgeFinder is still giving us that bullish reading that is critical. As long as we still have confirmation from the EdgeFinder, those are probably setups for me going into this week. So we will see what happens there. I also should mention that if you are not in our free Telegram channel, we've got something cool to show you. Inside of our Telegram channel, we are putting together a ton of free updates and resources. So if you're somebody who's like, fundamental analysis is really interesting to me, I want to add it into my trading, but I don't know where to start, the easiest way to start is to join our Telegram channel, turn on the notifications, and start reading along with the daily commentary that myself and my team are putting out. So we've got a couple people behind the scenes who manage this Telegram channel, and we put some really quality stuff together to help traders better understand what is happening in markets, but more importantly, why it's happening, right? Everybody can mark up a chart, but it's important that you actually know why the market is driving up or down so that you can make a prediction as to whether or not it is likely to continue, right? If you're just looking at technicals, you're kind of always looking in the rear view mirror. And if you're looking at fundamentals, you're looking ahead. And so that is why we focus so heavily on understanding the macro, right? Understanding what institutions are doing, understanding what GDP statistics and inflation and labor data, all that is looking at is really, really key. So again, I do like the dollar crosses here that we are seeing on the EdgeFinder. Kiwi dollar was also a bullish rating. I actually like this quite a bit. Take a look at Kiwi dollar getting a +5 score. And what we can see here is the Kiwi dollar is tagging into some longer term support. If you're more of a, wait for a sell-off kind of trader, this to me looks a little bit more attractive. Take a look at the Kiwi dollar on the bottom end of this recent sort of downward channel in the context of what's been a nice bottoming out on the Kiwi dollar. You had this Wyckoff spring, right? Big level of support, broke low, liquidity grab, whatever you want to call it something fancy if you want. Basically, we had a support level, a false breakout reversed, and we've been kind of moving higher here, now back into a key area of support. So I do think the Kiwi dollar has some potential upside as well. Lots of currency setups here forming for me over the weekend. It's been a minute, so I'm really happy to see some setups finally. I've been sitting on the sidelines for a lot of weeks now for just not finding a lot of trade setups. I've had bullish biases on gold, silver, but price is not formed. We finally got some movement with that Friday kind of Fed chair announcement, which sent, by the way, yields lower, right? So yields moved lower. That was the probability of rate cuts coming back into the market. You can see the big drop in the 10-year, big drop in the 2-year yield. And that coincides, of course, with the weakness in the US dollar, which I think is maybe the next spot we should spend some time. We do have the dollar index ending the week sitting at support. Very curious to see how this level plays out going into the upcoming week. And if we're going to see some sort of kind of falling apart of this mini uptrend that we've seen here recently in the dollar, I do want to reiterate that, again, the bigger term picture here for the dollar still is very bearish in my view. You've got key levels of supply overhead and in the context of what has been a really rough 2025 for dollar bulls. So I do think it is worth keeping on your radar these longer term, these bigger term levels of resistance, just in case you do get kind of a pop back in the upwards direction. But to me, you may be starting to see kind of this continuation. We've been in consolidation for some time, but if we're going to start to see rate cuts and we continue to see softness in labor statistics, et cetera, I think the dollar may be headed lower. So you had the retest of support. Let's see how price, if price is able to do one of these guys, break lower, any sort of pullbacks look attractive for possible selling, or if you were to get a bounce to the dollar up to 98.80, kind of recapping that Friday move, I think that there may be some short side opportunities there. So definitely going to lean bearish on the dollar going into this week, and that kind of coincides with the EdgeFinder's top setups. Take a look at the bearish setups for dollar. You've got dollar yen and dollar Swiss. Let's just take a look at some of those currency pairs here. Taking a look at dollar yen, found resistance around 148.50, let's call it. Looks like it may be on the cusp of potentially making a bigger move lower. I do think that makes a lot of sense based on the yen, which again I think is more oriented towards rate hikes this year, or perhaps maybe next year. But I think that dynamic where the U.S. is cutting interest rates and the Bank of Japan is hiking them, that could be an interesting one to watch. Dollar Swiss also did end up holding, at least for now, that resistance level that we've been watching on the channel. That 8100 level on USD CHF seems to be holding for now. Let's see if we can get that push back down, drive past that low, and maybe see some continuation on the momentum side of markets there. Let's keep going, see what else we can find here. Maybe on the oil side, I was looking for a short position on oil. Oil, however, has dried up. Let's go just to our economic side for a second and see if oil is still on the list. So you do have U.S. oil getting a -4 score here. So I'm going to keep an eye on oil. This one might still be a short setup for me going into the week. If you do get a pop up into this resistance point, I think there may be some short side action that I may be interested in. And if I take that trade, of course, I'll share it inside of our Discord VIP room. If you're not a member of that and would like to see the signals that I am sharing, yes, we offer a signal service, and also it is backed by real trading results. If you want to see every trade that I'm taking and why I'm taking it, I share it inside of our Discord group. I trade Forex, I trade indices, commodities like gold, oil, silver. Every trade that I take gets shared inside of our Discord server. And if this is something that you're interested in joining, there's a link in the description down below. I'm looking at oil for possible pullbacks and possible short side continuations of this recent move. Also, last thing on the VIP group, there is a promo code that you can find in the description that will get you a nice discount if you decide to join us inside of the room. Little quick update on cryptocurrency, right? So Bitcoin had a big pop. Ethereum had a huge pop. I do find it a little bit interesting. You are seeing a little bit of reversion here, a little bit of a fall back over the weekend. I'm recording this on Saturday. We'll see where it is at on Monday. Of course, weekends are a little quieter for trading activity, so we'll see if this is any sort of sustainable pullback or not. But a mini pullback here, to say the least, at least at the time of recording this on Saturday. With that said, we also, of course, saw, I mentioned Ethereum, huge breakaway movement there. We'll see what happens with that one. But again, for me, Ethereum, Bitcoin, these things look really strong. It's hard for me to kind of jump in front of a moving freight train. I think risk on is still prevalent at this time. But again, stocks, crypto, I think they generally tend to move in the same direction. The crypto super fans, I think, believe that to be, not going to be the case when the market truly sells off. They think crypto will hold up. I'm very doubtful on that. I don't know that we have enough evidence. I mean, crypto has never seen a true recession, a true bear market, and so that is my concern with that. Is that if you do see a true reversal in stock market, I think crypto will be taken down with it. But we'll see. Maybe I'm wrong, and maybe crypto has a day in its sun when the stock market is crashing and crypto actually holds up really well. Volatility index made a push lower here. You guys know I've been talking about on my channel my VIX long call spread, which got killed on Friday. Fortunately, this is a weird one where it's like you kind of want this trade to not work out because I own a bunch of stocks, right? So I own a bunch of stocks rallied, and volatility dropped off the face of the earth because, again, stocks rallying typically means like, hey, things are looking good, people are feeling good. Volatility and fear drops off of the map. And so that trade definitely now in the red. It's not a big loss for me. It's a really small position on my account, but I am still going to just hold that as a potential hedge. I have that out until November 19th. So November 19th of this year. So if we get some sort of big spike within, the next few months on the VIX, it is a good chance that VIX call spread could still come back in. And I do want to just reiterate something here with the move that we saw on Friday, right? We didn't get a guarantee that rate cuts are coming. We got an indication that it is likely the Fed thinks it's okay to cut rates a little bit. So yes, it's very positive, but it's not a guarantee. And if you get a really sharp, contrasting numbers and economic data between now and that September 17th meeting, it's not a guarantee that the stock market sees rate cuts. And so, if you get really strong jobs data and a hot inflation print, the Fed might say, hey, we're going to wait a little bit longer. And, they leave the door open on purpose. They don't guarantee, rate cuts or rate holds. It's possible that we get some surprise data. That's the thing about markets. That's why they're hard, is it's unpredictable at times. It's very hard to predict exactly what's going to come around the corner. And so all we can do is educated guesswork. And that's why when I went back to the indices at the top of this video, I mentioned it's all about risk profile, right? We don't know with certainty what's going to happen next, but the risk profile to buying stocks at their all-time high to me just doesn't work. It doesn't make sense. I would prefer to wait for pullbacks. And if I don't get them, I miss the move. That's okay. I have a substantial amount of stocks that I bought during the dip. On this channel, if you were watching, I was adamantly buying stocks during this time for the longer term because I thought that this move was unlikely to sustain itself to the downside, and that ended up being the correct call. So I'm still in a whole bunch of stocks that I bought during that sell-off. And so I'm still in the move, but what I've been doing have been slowly raising cash in my portfolio. So if you're unfamiliar with that, I use a stock brokerage for the predominant majority of my trading. I trade ETFs, stocks, options, etc. And so I've been raising cash in my account. That just means essentially free margin, or not having so many positions open, small allocation, and decreasing that over time. I still have I think I'm like 70% invested or in trades, in positions, but I have some cash that I continue to raise. And if the market were to sell off, that would leave me with plenty of cash to go shopping in the dip. I feel very, uncomfortable being all in on stocks at these levels with the macro backdrop that I discussed earlier in today's episode. So I am definitely just more on the cautious side. But again, my account, I think I still had a 1.4% gain on Friday. It was a really good day. And I actually took that as an opportunity to continue to sell calls against some of the stocks that I own, sell out of some positions that I don't necessarily want to hold forever. And I took it as a profit-taking day, essentially. So if it continues to move higher, I will look to take some more profits. And if it does continue to, or if it were to pull back, I would be glad and ready, prepared with cash on the sidelines. So playing defensive, offensive would be all in and capitalizing big if there was a huge move higher. But I wouldn't say I'm in an offensive posture. I would say, generally speaking, in terms of my portfolio, I am decreasing risk currently. I'm selling out of the higher risk stuff that I don't want to hold forever and closing out of some of the trades that I took in the April sell-off. So I hope this was helpful to you guys. If you enjoy my videos, do me a big favor, hit the thumbs up button. The last thing I'll say is that sometimes I get questions from U.S. traders on best brokers for Forex in the U.S. This is a regular question that I get. Now, if you're not in the U.S., I have several brokers listed in the description that might be a great fit for you, but specifically for U.S. traders, the brokerage that I use for Forex trading is Oanda. I have a special link with them that I wanted to show you guys here really quick. So if I pull up this sponsor thing here, they're not necessarily sponsoring the video, but I do have an affiliate relationship with Oanda, so full transparency there. But they have actually offered specifically to my audience a sign-up bonus available for a limited time. So if you want to check out Oanda, check them out down below in the description. I've used them for years. They're great people. I've worked with so many people there at Oanda over the years, and definitely a brokerage that I personally like, trust, and use myself. So if you want to check out Oanda, there's a nice welcome bonus for my subscribers here that they've put together for me especially. So thank you to Oanda, and thank you guys to watching today's video. Happy trading, and we'll see you back in the next one.